Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
As far as the new financial year started, we had only one information, that is, there'll be 1% of TDS put on crypto transactions. But now, the tax department has issued clarifications. They've answered some questions, and we have an explainer ready to all those questions. Before that, let's have a quick look at the big stories of the week. And of course, starting it with this one, which is tax department has issued clarifications on 1% TDS on crypto transactions. The CBDT, which is the Central Board of Direct Taxes, has released these guidelines with respect to the new Section 194S, which will come into effect from the 1st of July 2022. The circular answers questions like who will deduct TDS while transferring crypto via an exchange? How will TDS apply in case of transfer of crypto for another cryptocurrency? We'll dive deep into this in our explainer and you'll get answers to all these questions. Moving ahead, as per sources, an Indian ministerial panel will meet next week to discuss a goods and services tax on cryptocurrency transactions. The panel, comprising federal and states finance ministers, is seeking to broaden the tax net to track dealings in virtual digital assets, VDA. You'll hear this term several times in today's episode. Now, they want to do it in a more effective manner. The people with knowledge on the matter have said this. This meeting for 2 days will start on June 28th. Although the Officers Committee on GST has suggested the GST Council defer a decision on the cryptocurrency and other virtual digital assets tax. In its report to the GST Council, the Fitment Committee has suggested that a law on cryptocurrency regulation is awaited. Identifying all relevant suppliers associated with the crypto ecosystem would be essential, besides classifying whether they are goods or services. They feel that a deeper study is needed on the issues involved here. US crypto firm Harmony said that thieves stole around $100 million worth of digital coins from one of its key products. Harmony develops blockchains for decentralized finance sites. And now comes our explainer on this entire update on TDS. What is the update? The Central Board of Direct Taxes has issued guidelines with respect to the new Section 194S. But what is this section? It was inserted in the Income Tax Act through Finance Act 2022. It mandates deduction of 1% TDS on transfer of crypto and other virtual digital assets. Now, when will it come into effect? This will come into effect from the 1st of July 2022. What all does it say? Let's cover who will cut the TDS part first. So in a peer-to-peer, that is direct buyer to seller transaction, the buyer, that is a person paying the consideration, is required to deduct tax under this section of the Act. But if this transaction is between an exchange and buyer, which probably will be your and my interaction, so a lot of us exchange all of this on an exchange. So in that case, buyer would be crediting or making payment to the exchange directly or through a broker. Now, the consideration for transfer of VDA shall be on gross basis after including GST commission, or it should be on net basis. So that's also another question, and answer to that is it will be on the net consideration after excluding GST or charges levied by the deductor for rendering service. In the end, how will TDS apply in case of transfer of crypto for another crypto? In this case, both of the parties are buyers as well as sellers, so both will have to pay the tax and show evidence for the exchange of the virtual digital assets. This was my explainer, and now we have our guest as well who will also answer some of the sub-questions of these questions and also some other queries that I also had. She also helped me decode this entire circular as well. We have with us Vikas Khanna, Director of Advocacy and Regulation, CLEAR. A very warm welcome. Now, my first question has to be about this, the difference that we are seeing, which is exchange between two different crypto. There's first a normal exchange, and then there is exchange between different crypto. You have one crypto to trade between another crypto. So there are a few details that you wanted to add. Go ahead with that.
Sure. I think that's That's been a very important aspect that has been clarified in this guidelines. And what the department is saying that if you're exchanging one VDA for another, there are actually two legs of the transaction. So you have two buyers and two sellers, and therefore TDS deduction will take place from both the ends of the sell transaction. So let's say if you're exchanging currency X for currency Y, in such a situation, if this transaction has been facilitated through an exchange, then the exchange will deduct 1% TDS in kind from X and 1% of Y. And whenever they make that deduction, immediately they will place an order, they'll execute an order to convert that 1% of X and 1% of Y into what they are now calling is primary VDA. So the TDS also takes place in kind, and the net balance. So let's say if you've sold X, then you will receive, whatever is the balance after deduction of 1% of X. And so the exchange will go ahead and convert these 1% X and 1% Y into what they are calling primary VDAs, which have been defined in the guidelines as you have Ethereum, you have Bitcoin, USDT, and USDC. So these four have been mentioned as primary VDAs simply because it's easily convertible to INR. Now, when that happens, the exchange will at the end of the day, so at midnight, the exchange has to go and liquidate the value of these primary VDAs into INR, and that's the value they will go and deposit, right? So essentially, just to sort of try to simplify it, that deduction happens in kind, and if it is a non-primary VDA, then it has to be immediately converted by the exchange into primary VDA, and at the end of the day, at midnight, the exchange will go and sell those primary VDAs, whatever TDS they've collected in those primary VDAs, and then realize the INR value, which they will go and further deposit.
Okay, so this was a very specific situation here. Now, there must be several consumers here who are transacting who are doing these crypto transactions, and they probably don't get taxation, TDS, and all of that. What does really change for them?
Sure. I think it's very, very relevant as a person who is investing in cryptocurrencies to fully understand what changes for you. So firstly, of course, we know there's a 30% tax, but effectively what you're now going to see is the exchange may actually try to renew the customer agreements they had, because the guidelines very clearly specify that the exchange needs to sort of get into an agreement that they are making the TDS deduction on your behalf and all of that. Secondly, you will see that in your Form 26AS, whatever TDS has been deducted, you will start to see it show up in your Form 26AS. That's very, very relevant. The other very important aspect that consumers or investors need to understand is that the thresholds that have been defined for applicability of TDS, 50,000 and 10,000 in different scenarios, when you're testing for that threshold, you have to include transactions which have been done from 1st April 2022. So even though the TDS is going to get implemented from 1st July, the applicability of TDS happens if from 1st April. So in the sense, when you're testing for the threshold, you have to include the values effective 1st April 2022.
And Ms. Khurana, then there's this another point that we were also discussing before the show, which is a threshold of 50,000 rupees and 10,000 rupees. And I got a bit confused there. And I know you tried to decode it there, but if you can do that for our consumers as well, for our customers here who are general, consumers.
Sure, I'll try to simplify it. So for most of us, that limit is 10,000 rupees on an aggregate basis in a financial year. Right? For most of us, that limit is 10,000 rupees in the entire financial year. If you exceed that value of consideration, then the TDS kicks in. But if you're someone who's either running a business or doing a profession, for you, the limit is 50,000. And it does not apply to all businesses and professions. Even within those, there are limits. So there's 1 crore threshold for a business and 50 lakhs receipts for a profession. Now, what that means is if you are a business with turnover less than 1 crore in the entire financial year, preceding the year for which we are deducting TDS. So you have to look at the turnover in the preceding year. If it is less than 1 crore, then your limit stays 10,000. right?
Oh, so this
But if it
50,000 and
exceeds-
10,000 is the aggregate value of the transactions of VDA that one is doing.
Correct. It's the consideration. It's actually the value of consideration that you're going to receive.
Got it. And also, I think we would like to reiterate that, all of this, the entire circular actually applies to only the residents of the country, right?
Right. So the TDS kicks in if you're making a payment to someone who's resident in India, right? So that's when this particular section will kick in.
Sure. Thank you so very much. It was lovely having you. And here we decode such complex things while sipping a coffee, because this is called Coffee and Crypto. And now we'll move on to our next explainer, which is about why the market is crashing. Before I get into that, I'll quickly have a sip of this and brace myself for what is going to be very difficult here, because all of us have had a difficult time in past few weeks because of the market, because of the red that we see. But I've tried to put few pointers here of why is the market crashing. Of course, I spoke to a lot of experts, and they have also listed these factors which have been responsible. Number one is falling risk appetite of the investors. Then some experts also believe that stock and crypto markets have now become highly correlated. Stock market in red can mean the same for crypto as well, and we've seen international or global markets, stock markets here are not performing quite well. So you see that effect on the crypto market as well. Now, US Fed rate hike has sent shockwaves across markets. The aggressive rising of interest rates is commonly viewed as a leading recession indicator, hence everybody moving to the safe haven. Now, there are regulatory challenges that exist actually in our country, but several other countries are also facing, but definitely we're looking ahead to have a regulation. But Celsius also added to all of this, added to this crisis. What is Celsius? Well, crypto lending platform Celsius Network announced that it is freezing all its crypto transactions, citing extreme market conditions. Let me explain what went wrong. First, what is Celsius Network? Celsius is a DeFi lending platform. They also say that we are centralized finance, but they actually loan crypto. This is founded in 2018. They offered yields on various cryptocurrencies, including Ethereum, Bitcoin, and many stable coins. On their website, they explain their model as interest income and lending platform accessible via a mobile app. What are their functions? Well, users are able to earn interest in their cryptocurrency. One just deposits crypto in Celsius and is promised a certain yearly return, which may vary, but is publicly advertised as up to 17% APY. APY is annual percentage yield. Now, the crypto holders can earn interest by transferring their coins to their Celsius wallet and borrow USD against their crypto collateral, paying an interest rate. Now, all of this is fine, but what went wrong? The issue is linked to staked Ether. Staked Ether is a creation of Lido Finance. It enables anyone to earn Ethereum from staking without operating staking infrastructure. So staked Ethereum can also be used to generate a higher yield than is possible with the plain Ethereum. Hence, this is preferred. Now, Celsius bought a bunch of this. Now, staked Ether is no longer trading 1:1 with Ethereum. So they bought something for $1 that's now worth, let's say, $0.96. In a nutshell, they opened a bunch of loans, took user deposits and traded them for this staked Ether. In the end, they owed a lot of money and didn't have the reserves to pay it back. So that's essentially the Celsius crisis. We have our guests also who try to decode this entire market crisis. We have Ashish Anand, founder and CEO of Brew Finance. We also have Om Malviya, President, Tezos India. A very warm welcome to both of you. Mr. Malviya, to you first. Is this crypto world's Lehman Brothers moment? I think you'll have to unmute yourself.
Yeah. So if you look at Lehman Brothers, what happened essentially is some centralized bank gave out, a couple of bad loans, and when the market crashed, they became insolvent. Simply, right? It is not necessarily, let's say, a Lehman Brothers movement, but you could think of it that there were some DeFi protocol which were comparable to banks like Anchor or Celsius Network was essentially a bank, a centralized finance network provider, right? And they did some bad decisions. They did not do right risk management. They did not apply right algorithms. They did not do good due diligence, and when the market crashed, they fell out. Now, the other point to look at here is, when compared to Lehman Brothers, that while in Lehman Brothers, not a lot of people saw it coming. Everybody thought that it is going to be fine, right? But in crypto, in the case of Anchor, in the case of, not sure about Luna, but in case of Lido Finance and Anchor, there were a lot of red flags that if market crashes, this might go out. But people didn't listen. A lot of big investors didn't listen because they were all riding the wave of high returns, right?
Sure.
Everybody knew, even we knew that it was going to go down if a bad crash happened, and that happened, and it wiped out billions of dollars.
I also want to talk about Celsius here, Mr. Anand. There's also this term which keeps on getting repeated here in this conversation, which is DeFi and CeFi, which is centralized finance and decentralized finance. So what exactly was Celsius Network? And do you think we need some sort of regulation for DeFi because there's money involved and heavy money involved in cases like Celsius?
CeFi and DeFi is like when the borrowers and lenders directly interact through a protocol like Aave or Compound. CeFi means DeFi is on the back end, but there is an entity which is in the front end and is fronting the DeFi protocol to the customers directly. That is what Celsius was, because it was connected to DeFi. So we call it centralized finance, where there is an entity like Celsius, and they will take the money and they will decide where to deposit that money or from where to deposit for the purpose of yield. So there are two sort of differences. And what we see that certainly regulations are needed, but I would also like to point one thing, that as of today, the total value logged in the decentralized finance protocol is something around $60 billion. A very small sum of money as compared to the total global financial ecosystem. So at this moment, applying too much of regulations, because there have been certain incidences, in my opinion, will be too much of a harsh punishment for the industry. And it is a time to give customer protection for sure, but apply in such a fashion that it applies only when there is a large sum of money involved. For example, here in India also, if you see NBFCs are categorized by RBI based on total deposit, total exposure. We need those sort of structure, it's the regulatory structure, instead of having the uniform structure across for the DeFi, in my opinion.
Right. I wanted to discuss this in detail, but that's all the time that we had for this segment. But on the other side of the break, we're getting you a Michelin Star Indian chef who's come out with a book, and it's not any other book. It's an NFT book. Who that is and what that conversation... Oh, there you have the faces. We have Chef Vikas Khanna and also someone from Akshay.io as well, Mr. Raju there. So we'll have this conversation with them after a very quick break. The Michelin Star Indian chef and author Vikas Khanna has released a book. It's called Sacred Foods of India, and he's teamed up with an NFT marketplace, Akshay.io, to launch it as an NFT collectible as well. Chef has written Barkat, Utsav, and My First Kitchen in the past. This will be his 38th book. So we have Chef Vikas Khanna and also Ganesh Raju, who's founder and CEO of Akshay.io, with us. A very warm welcome to both of you and congratulations on the book, Chef. Now, this is your 38th book, and I read it somewhere that your goal is to write 50 books in total?
I promised my dad.
Oh, that was a promise, and which you'll definitely keep. But what's your emotion like with Sacred Food of India? Tell us about the book.
Very high, as always, and also very anxious. We are entering a whole new territory. I think... for my entire career, there have been a lot of firsts, and this also becomes one of the firsts for artists or chefs to see something that, how cookbooks as a new future, look at them, at how the content will be consumed, and also understanding that, for any artist, you have to keep finding new equations to reach out to new markets, to open new territories. So I'm very excited and nervous both.
Okay, and Mr. Raju, what was your recipe for this NFT creation?
So mainly the founders coming from US, living there, we are still attached to India. And so as a first product, we wanted something that can highlight India's heritage, traditions, and cultures. right? And food, what else can touch, better than the food? It touches hearts of all the people, right? So Vikas Khanna, he is such a visionary, and this has been a great partnership, and India is celebrating its 75 years of independence. So this is the perfect time and perfect partnership. Really proud.
Okay,
Thank God the book got delayed, and I kept cursing myself, why can't I put this book together? Now I know the reason, Arun. It was waiting for India at 75 and Akshaya to come on board.
Definitely. But Mr. Rajesh, if someone buys this book, they get a physical book as well, right? I mean, if someone buys an NFT, it's a combination, right?
Exactly. So what they get is the physical book, the NFT record stored in Ethereum blockchain, and a digital twin, which is an exact replica of the real book. And this digital version is looks exactly like this, and people can interact with it. They can carry on with them and showcase it in metaverse that is coming soon too.
Right. And how has the response been like? When someone gets into NFT, they want to make money as well. So how is that part handled?
This is a box of sandalwood, and this is amazing with all the jewels and everything, because though we talk about very simple foods, but at the same time, you're talking about a majestic history which comes with it, right? Opens like a work of art, right? So that's digital. Of course, this is just the bookmark, Arun, for people to understand. And that's the book. These are Swarovski jewels, and that's what you can explain to him.
So that, if you see the logo, that has an NFC chip. And when the users buy, the buyers, when they get all their information stored in this NFC chip. You take your phone, get it near that, it will pop up who the owner is, the properties of the book, how the book was made, 8 years of work, and every detail of it, how the paper was brought from Italy, how the ink was done, how the glue was done, all that. And where the NFT of this is, and where the digital twin, which the buyer also gets along with the book, and where is that stored.
No, that's beautiful. And now I am almost lured to ask the cost of the book, if you can share.
So we have two versions of this book. One version comes in a box that is made with walnut wood and maple wood, sourced from Canada. And another version is a sandalwood book. It is made with pure sandalwood book, and it has Navaratna stones on the box with real diamonds and Swarovski crystals as well. Both the book and the box has Swarovski crystals. The price point for the sandalwood book is $50,000. We have only 2 editions of this, and very limited. In that, already one has already been sold to the Dubai Culinary School here. And so we have only one left. And the walnut wood and maple wood version, we are releasing only 250 of them.
And of course, this cost includes the NFT version of it as well.
Correct. And the price point for that is $20,000.
Thank you so very much, gentlemen, for joining us for this conversation. With that, we've come to an end of this show. We'll be back next Friday at 6:30 p.m. The show is called Coffee and Crypto. I am Arun Singh. So goodbye from my side.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.